Hey everybody, good afternoon. My name is Doc Severson of 12 Minute Trading. Today is Monday, the 16th of December, and welcome to our weekly market update that we do. So it's just going to be myself. Dave is still down in New Zealand. He just finished up his Ironman, did quite well. Awesome trip. So he'll be back in, I think, a couple of weeks from now. So yeah, about a week or so from now. So he may or may not be in the next session, but either way, as we approach the Christmas holiday, we do have Santa calling, at least today. So we'll see whether or not we get this into the end of the year. Let's take a look here as we look at the S&P. So today we have nice move. I mean, this is just a bull flag. This is just your typical garden variety bull flag. Now, what I'm trying to figure out, and I don't know the answer to this, is, let's go ahead and bring my pen down. Is this consolidation going to break to the downside first, or is it going to break to the upside? And the reason why I ask this is because we've been through this several times before where we've had these energy spikes and the market's all wound up like a tight spring, and everybody's looking for it to break out, and instead what it does is it drops first, sets up the hook, right? Sets the hook to create the bear trap, and then boom, up it goes. So we've seen this several times. Consolidation drops to set the hook to the 50-day moving average, and then boom, up she goes. Same thing here. Consolidation drops first, boom. And we're in the next one. So are we going to drop first before we head higher, or are we just going to break out from here? Again, I don't know, but all I know is that when we see markets with this level of consolidation and this much potential energy to run, they don't usually sit there for very long. So what I would watch out is if you see a reversal candle. So what you want to do is you want to look for a reversal candle. Let's see if I can find you one here. There was a couple of them here. So there's a couple of reversal candles here where we started out the day strong and then finished lower. That's the type of reversal candle that may show that we're going to be heading down. Otherwise, if we see just a straight on, here's another reversal candle here, upper wick for this thing, and then ultimately drop. Now, obviously, the big catalyst this week is going to be the FOMC on Wednesday. Everybody knows Jerome Powell is just going to drop 25 basis points, excuse me. He's going to drop the rates 25 basis points, but what will he say? Will he be hawkish with his tone, or will he be a little bit more dovish? Probably, I don't know, just because we have converging, or I should say diverging points there. We do have inflation going slightly higher, but we've had jobless claims rising. We've had the jobs report, or a real big miss last month, those kind of things. And you wonder if, which is going to take precedence. So we'll see. One thing we know at this point with a high probability is that the January Fed meeting more than likely will lead to a pause. So that's one thing we'll probably hear, at least the reference to or the hint of a potential pause down the road. So what the market's looking for is certainty right now. Look how far it's come. We have gone straight off of this. This is the 22 bottom, which bottomed out close to 3,500. And look at this. We haven't quite doubled since that point, but every bit, we've had a hell of a move here. So this has been one huge cyclical bull that we've had since that point, and we're approaching exhaustion, but not quite there yet. So there's still enough energy on the monthly chart to drive the next swing. There's still quite a bit of energy in the weekly chart to drive the next swing. Could we drive into the end of the year, into the end of the month? So what could be an outstanding year, well, it's already an outstanding year, but it could finish on a very strong note, kind of like 2017 did as it transitioned into 2018, if you guys remember that. Okay, that is the S&P. And let's see what's driving things today. If we look over at just the heat map, we can see Google's very strong, 4%. Tesla, extremely strong, up 5%. Broadcom, up 11%. Now, not everybody is happy. NVIDIA is down 1.5%. Microsoft is up slightly, 0.5%. Apple's up about 1% right now. But even some of the smaller names like CrowdStrike and Intel, I'm actually surprised to see Intel positive here because the chips are getting beat up. But banking sector, not so much today. Energy, not so much today. If we look at the sector spiders right now, we can see kind of what's moving and where money's moving into. So you can see energy is down today. Materials are down. The VIX is up. VIX is up, not surprising, where we have the Fed meeting coming up, seeing the VIX come up. Healthcare down. Tech is up today, and tech is driving everything. So you can see this. The NASDAQ itself is up 1.5%. So if we go out here to the NDX, this is where we are getting the rotation coming into. So the NASDAQ, and we talked about this a couple of weeks ago, Dave and I, we said the NASDAQ has the highest level of potential for the move. And, you know, that usually ends up being the recipient of the capital when it happens. So we had the NASDAQ into the early fall was doing all the heavy lifting and doing all the hard work. We had money rotating out of big cap tech and into things like industrials and into the Caterpillars and the Deeres and so forth. Also energy. But look at this candle here. This is amazing. We had plenty of energy left to go. So this is why we have the trades in place that we do. Okay, let's go look at the Russell. The Russell's also in good position to move from here, but it's not really kept up with anything in the last couple of weeks. So it's been kind of drawing down. The Russell's been very hard to trade for the last couple of years. Just so choppy. This was a false breakout, led to a big, long basing pattern, very long basing pattern. So what I'm wondering now is if this is the cup, is the handle going to set up now? Technically, it does not need to do that. Technically, there's no need for a handle to set up. Usually the reason why you have a cup with handle attached to it is because by the time it rallies up to this point at the neckline, it is exhausted. But if you look at the measured move target from this, it's the depth of the cup. So we are 1,600 to 2,400. That's 800 points to the upside. And that is Russell 3,200 is the upper target. So that could be in play for some time in 2025. But right now, Russell's not really moving. It is up today. The Dow is down slightly. Let's look at the Dow. The Dow has actually gotten punished quite badly lately, and this is almost the same chart that we see with the Russell. So 2 straight weeks in a row to the downside, and this is what I talk about all the time. Here's the energy. Here's the energy spike. It can go this way. It can go this way. Which way is it going to go? We always want to find that out, and that tells us a lot about something. But I would anticipate that as we get into the end of the year, this is going to hit the 50-day moving average and more than likely slingshot off of there. Okay? So guys, I don't have Dave to bounce ideas off of today. If you have any questions, please let me know. We'll just be here for another few minutes. So if there's anything that you want to talk about, any questions that you have, go ahead and fire away. Now, one thing that's obviously been a big trade for us, especially over the last month, has been the Bitcoin ETFs. And this has been since the election. This has exploded. And it's gone from about 39 and it's up at 60 today. And the 57 level corresponds to Bitcoin 100,000. So this is doing great right now. And the energies, even though the weekly chart energies are on the floor, it doesn't care because there's just so much money coming in off the sidelines trying to get a piece of this. And we really even haven't even seen the fact that there's only 21 million Bitcoin that are ever going to be minted. And as you get into the end, it's going to be tougher and tougher and tougher and tougher to mint those Bitcoin. It's going to be much more difficult. The first ones were easy. The latter ones are going to be the toughest. And that's where we're going to see this meteoric rise in here. So international pet sitter, so as far as the NASDAQ, the NDX, I don't see why this can't continue to rise until we have exhausted this. So right now we're getting heavy rotation into the NASDAQ. You're seeing that December candle be extremely strong, and that's on top of November as well too. So there's a ton of potential energy. There's no shortage. There's nothing technically, I would say, that's holding this back. Now, I'm not here to predict the future. All I can do is I can look at the charts and say, where's the trend on each time frame? And it's clearly to the upside. Where's the energy on each time frame? There's enough. There's enough energy on each time frame to continue to power this to the upside. And right now, tech into the end of the year is kind of a trade. Now, we'll see if the January effect comes into play where small caps catch a bid in January. But we'll cover that in a couple of weeks. So the Hoffman family, yay. Thoughts on Bitcoin making all-time highs in the past 24 hours and any fib analysis. I'm going to go over to my, I'm going to look at just the spot Bitcoin. The spot Bitcoin here. And let's plug that out. So I'm just going to look at BTC because everything else is just, like even the IBIT is just a derivative of this. This is the one on Bitstamp, which I have the most history with. Most people don't know that spot Bitcoin has got a different chart with every exchange that it's on. So we're used to trading through brokerages like E-Trade or TD Ameritrade or, Schwab or Interactive Brokers or Tasty Trade. And then what they do is in the background, they go out to all the different exchanges and they try to find the best price available for that. Crypto is actually, even the centralized world, I'm not even talking about the decentralized world, but the centralized world, there are some brokers that are doing this, but generally what you're doing is you're logging into the actual exchange itself, such as Gemini, Kraken, Coinbase, Bitstamp, Binance, each one of those. And then it's up to each exchange. It's got their own individual market for that asset. So it's really kind of interesting how that, and that's actually how Sam Bankman-Fried, the guy that's in jail right now, that's how he made his original billions, was doing arbitrage between the different exchanges. So very interesting. So here we go. This is spot Bitcoin, and spot Bitcoin is up almost 2% today. And from an energy perspective, it is a little bit, what we're seeing is we're seeing the daily energy build up, and then we're seeing the daily energy blow off to the upside. This is all happening while the weekly chart is in exhaustion. It's completely exhausted. But what I always talk about in fractal energy trading is when you have a market in exhaustion, there's 3 ways that it can restore itself. The most common way is to see the price just kind of walking sideways like this, which is exactly what happened back here. So this got into exhaustion, walked sideways for, 8 or 9 weeks, and then full energy, boom. That's the most common way that we see. This is what I sort of expected to see, is the price to be sitting underneath 100,000 for several weeks, dealing with all that overhead supply. But what's happening right now is we're getting a short squeeze. We're getting a gamma squeeze, and a lot of that is being driven by the ETFs that are on Bitcoin. So the IBIT and all these other ETFs that are out there. So that's the most common way, is to see a sideways move. The other way that we can see a move is actually for the price to drop straight back. That's the fastest way to recharge a chart. It hasn't done that at all. There's so much pent-up demand underneath the price in the auction process, that's not going to happen. So the third way is for it just to keep on grinding, but very slowly. And that's what we're getting. And I only see that during the most bullish type of market environments. So that's what's happening. It's just kind of grinding higher. And when we drop some of these big, huge, mammoth candles off the back here, the energy will come back up again. But it's just pushing right now. And there's just so much going on. And the other thing, that we're seeing is, let's see, I'm going to go to, if we look at the options for IBIT, this is where I think it's really interesting. I don't see this very often. Hey guys, I think we're back. If you're still there, I just got a BSOD. The blue screen of death. I don't think it liked me shifting things around. Hang on a second here. There's one thing I was going to show you guys, which is the option chain. If I can get this to come up. You know, in all the years I've been doing this, I don't think I've ever BSOD'd a webinar. So you guys have the honor of being on part of the first one. Okay, here we go. Let's bring this over if I can. Okay, I'm going to look at IBIT. And we're just going to go out 32 days or so here. And the interesting thing, now I don't know, I haven't looked at this for a couple of days now. And I'm not going to bother with the pen. But if we go, the price is about 60.5. If we go out about 5 points, we're about 250, 265. If we go down 5 points, we're about 220, 230. Okay. Not seeing my screen. Oh, there we go. Okay, thank you. So here's the point. If we go from the current price here, which is about 60.5, if we go out about 5 points, which is, let's say that's 66, we're about 255 by 265. And then if we go down about 5 points, we're going to see 220 by 230. So what's happening is all of the calls are being completely bid up. So there's so much more premium on the call side than the put side. So for right now, what I've been doing is I've been doing what are called buy rights. Okay. Man, I can't talk with my hands here. I'm going to have to see if I can bring up my pen. We'll give it another shot here. So buy right is when you just buy the shares. So if you want to buy the shares right now, it's going to cost you $6,000. Okay, so if you have $6,000, buy the shares at the current price. Let's see if I can pull this up here. There we go. Okay, so what you're going to do is you're going to buy the shares. So that's going to be 60, 65. And then what you're going to do is you're going to sell what's called a covered call. So if you want to just have a little bit of capital gains, then you'd sell the call that pays you the most, but you're going to bring in $450 from that. Oh yeah, you can trade IBIT on Tasty Trade. Let's see if I can bring that up. I got to boot that up and I'll show you that same thing there. Or what you can do is you can give yourself maybe a little bit more room. Now, what a lot of people like to do is they like to trade based on standard deviations, which is in this case 10 points. So you could go out one standard deviation, go up to 70, and you could sell the $70 call for like a $170. So you're obviously not bringing in as much premium, but you've got all of this. You'd make $1,000 on the capital gains buying that. So it's a balance, these covered calls. That's a balance. Okay, here's Tasty Trade. So don't be afraid to cross the streams and get into crypto. Don't be afraid to cross the streams and get into crypto. So here's a couple of trades that I have. So I've got 300 shares, and you can see what's happening with the 300 shares. I bought them at roughly $54. And so they're up now. And don't worry about those. Those are insurance puts. I did some December 20, which is this Friday, some $57 calls. So that's down, but I got paid for those two calls. I got paid $600 to set up that trade. And if I let this get run over on Friday, I'm just going to surrender those shares. I'm going to surrender 200 shares of that. And then I've also got another 100 shares for January 17th at $57. And again, I sold that for $420. So these are extremely conservative trades that are called covered calls. And they work really, really well. So it's a balance. You can either play them more conservatively, get the bigger fat premium of the very beginning of this, or you can give yourself a little bit of room and get some cap gains, which is obviously fun with something like Bitcoin. But this is a game changer. This came out a month ago. The options on the BlackRock IBIT Bitcoin ETF, and there's other ones as well too. And also what you can do, if you guys are really into this, you can also do Ethereum options. The options aren't as good, and this is based on a futures contract instead of the spot. But there's certainly trades available on this. I mean, look at the premium that's available on these. 78% implied volatility. So for this particular chart, that's EETH. If you think support is going to be at $76, you could sell the $76 put, and that's going to bring in, now the open interest isn't very good. So what I would do is I would focus on the open interest strikes that have more open interest there, because you don't want to get too far out, because you won't be able to shut your trade down early. But I've got $75 short puts on EETH, and that one's working out nicely. I think they paid me $700 per contract on that. From a risk perspective, what would be better, close to money or far? Okay, so let's do the math on one. I'm just gonna do this on Thinkorswim. So let's do the IBIT, and let's pick 32 days out, and let's do the math on here. In fact, what I'll do is I'm going to just set up a blank page here. Okay. So scenario number one, this one is conservative. Okay, so we're going to buy 100 shares at 60.77. Okay, so we're putting in $6,000 into that. And we are going to sell, again, the price is 60.77, so we're going to go, 61 is not much, so we're just going to do 62. We're going to sell the $62 strike. And that is, let's see what kind of delta that carries. That's 50 delta, right? That's about as conservative as you can get. So we're going to sell the 17 Jan, $62, and we're going to sell that for, let's just say $4. Okay. So there's three possibilities. Let's say the price doesn't move at all. So there's no capital gains. You haven't lost anything. You haven't gained anything. You still have your $6,000 worth of stock. But if the price doesn't move, you make $400 or let's see what this is here. .6%. That's not bad in 30 days. That's not bad, right? And you have downside protection of 4 points. So this can get down to $56.77 per share, and you haven't lost anything because you get that $400 coming in day one. You get to do whatever you want to with it. Okay, so let's see. Scenario number two, price goes to 62. What is that? $1.23? Yeah. So you make $123. I should say price goes to 62 or higher, because you're not going to make any more than that. So you're going to make $523 divided by 6,077. That is 8.6%. Again, pretty good for not doing anything. And then as we said earlier, the price can go, if it goes down, you can go all the way down to $56.77 per share, and you're back to break even. All right, so let's look at scenario number two. This would be an aggressive covered call. So we're going to buy the 100 shares at 60.77, same thing. And then we're going to sell the 17 Jan instead of the $62 call. Let's go further out. Let's go to, we could do the $71 call. And we would make how much for that? Let's say $1.50. Okay, same deal. Price does not move. You make $1.50 or $2.5%. You make, let's see, 71 minus 60.77. $1,023. So that's $11.73. And that's 19.3%. Okay, so the aggressive covered call is you have a smaller probability of making the 19.3%. You're going to make probably somewhere in between there, but it gives you more room to run. You have less downside protection. If the price goes down, you only have 1.5 points of downside protection. Is it possible here to use the 2% rule for risk per trade? Well, covered calls are not a small account strategy. You got to have enough capital. Now, could you lose? Could you set your loss for 2%? You can, but it's tough. It's tough. So if your entire account is $6,000, it's going to be very difficult to set your risk for $2 or 2%. Sorry, for that. Because the risk is obviously if the price drops from there. Now, what other people do is they use what are called collars, where you use some of that premium to buy puts, and that's what I've done as well too. Okay. Well, guys, I'd love to talk to you more about this. I've got to run. So thanks for enduring the technical issues for this today. And let's see where things are at right now before we take off. Let's see what's going on. What is happening with this market today? We have gone. Now, this was interesting because this dropped. This dropped after the opening range. We made the fake as if it was puking, like it has been doing for the last week. And that created a bear trap, set it up. And right now we seem to be consolidating at the upper expected move, which means that it could actually go higher for the day. You never know. But the internals are dropping a little bit. So I would anticipate that we'd probably just kind of walk sideways into the close at this point. Okay. Thanks, everybody. Thanks for joining me here today. We'll see you guys next Monday. And yeah, that's going to be right before Christmas. So we'll see you around. Thanks, everybody. You guys take care.